Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on December 17th. Bring you some commentary here in the energy markets. First thing, though, I do want to get started here. If you'd like to receive our 2015 Hightower Commodity Trading Guide, excellent guide. It's packed with a lot of useful information. If you'd like to receive this here, go ahead and the email address there on the screen, shoot me your contact information. We get this sent out. We also have our 2015 handy pocket calendar. It's great for traders that are on the go. Lists all the different option expiration dates, last trading dates, first notice dates for futures contract, as well as all the major reports that come out throughout the year. So if you'd like to receive these, go ahead, shoot me your contact information. We get these sent out to you. They're must-haves for an active trader. You know, talking about the energy markets, obviously, tons of activity, a lot of news going on. You flip on any major financial station, pick up any, financial newspaper, oil prices are in the news. We've been continuing to hit multi-year lows. Here recently, we were down trading the $54 mark. Currently, though, oil has had a little bit of an uptick here. We're up right now about a little over $1.80 a barrel. The January contract's around $57.75. Brent's also up a little over $2, trading around $64.17. Complex is firmer as well. A lot of different news affecting the markets. One, today, some breaking news that came out, although it's been in the works for a little bit. What was announced here today, New York, they're going to go ahead for the time being, they're going to go ahead and ban fracking. And so I think that's kind of playing into the market here a little bit. The idea is maybe other states are going to join on board with that. All the news about Russia. I mean, let's face it, Russia right now, they look like a complete mess. The currency there is basically crumbling. They derive a lot of their revenue from the sale of oil. A lot of conspiracy theorists are thinking that, the U.S. has joined up with other countries to help put oil prices under pressure in order to bring these economic sanctions that our president has spoke so often about to help put a lot of pressure on Russia. Clearly, I think it's working with all the turmoil over there in their currency. Speaking of OPEC, the last meeting, and I talked about this in one of the prior posts, OPEC came out, they announced that no production cuts for right now. So oil prices have basically, pull up a chart, have basically been continuing to sink day after day, week after week here since midsummer, and OPEC coming out and announcing they're not going to cut any production at this point in time, and that's helped put even further pressure on oil prices. So you've got a lot of things that are going on, and then to top it off here today, EIA data came out this morning. Most traders were looking for a cut in the stockpiles here of about 2.25 million barrels, and there was a draw, but much smaller than that. It was 0.85 million barrels here. So although we got a draw, it was smaller than expectations. And when you take a look at the total stockpiles of oil right now, we're running at basically record highs. Total stocks for crude oil right now are about 379.9 million barrels versus the all-time high, which happened to be a year ago, which is at around 372.3. So, one of the things I've talked about in a lot of these posts is that, you look at our total stocks of oil, it appears we have plenty of oil. Back here a couple of weeks ago, EIA, they revised their revised expectations downward here for demand outlook for 2015. You couple that with problems that we still have going on in Europe and things that are going on over there, and traders can understand why oil has come under pressure like it has. Now, obviously, the big question is, where do we go from here? And I've got some thoughts and ideas on that. You look at the short-term technical indicators, market extremely oversold. Short-term technical indicators, of course, can be a bit misleading because they're taking the last 14 days, basically a lot of them last 14 days worth of data, depending on what you're looking at and how you have them configured here. So it doesn't mean that a market is due for a bounce, but in my personal opinion, I do think the market could be nearing an area where there could be an opportunity to see a short covering rally take place. And I've got some thoughts and ideas on how you can potentially play that. So if you're interested, give me a call, shoot me an email, we can get into more detail. And don't forget, if you want to get your hands on this guide, shoot me your information and we'll get it sent out to you right away.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.